Hello and welcome back to Crypto Saving Expert, where we discuss the latest cryptocurrency news and introduce you to the pioneers and the founders of the cryptocurrency space. Today, we are very kindly joined by the founder of Haven1. Jeff, please say hello to our community. Thanks for joining today.
Hey, and thanks for having me. I appreciate it. I look forward to the discussion today.
Awesome. And let's crack right into this. So Jeff, if you could tell us, what is your role within Haven? And also on your background, what led you into cryptocurrency and blockchain technology?
Sure. So I'm one of the co-founders of Haven1, focus a lot on the operational side, the growth side. So my journey into crypto actually started in the end of 2015. I actually first heard about Bitcoin and really started looking into Bitcoin in 2013 when I was founding my first company. But I unfortunately didn't invest a whole lot then, but really it piqued my interest once Ethereum was launched and the idea of actually utilizing blockchain in a different capacity with smart contracts. So I started dabbling a bit then, kind of tinkering around, and then really kind of jumped in like full on in DeFi summer, as I saw the biggest use case there.
Yeah.
And then ever since then, kind of just been on and off into crypto, doing a lot of investing, advising. Most recently, I was the founder of a company called Coinbag, which helped Web3 businesses and public institutions that manage digital assets to connect to multiple wallets, all from a single place. I think from my ethos in this space, being in it as long as I am, I think there's a lot of basics that are missed in terms of like how to actually manage crypto properly, from not only individual investors, but all the way up to businesses, even Web3 businesses that have been in the space for a long time. So, bringing trust, security, all those types of things is something that I think is, we're moving so fast in this industry. And sometimes we have to actually take a step back and solve some of the core problems. And so that's really, what I did with Coinbag, and then kind of bleeds into what we're doing over at Haven1 as well.
Awesome. And if you could give us a quick overview of, what Haven1 is up to, what your team is building, and what you set out to achieve.
Yeah, absolutely. So we're an EVM compatible layer one blockchain that's really built on the foundation of we've seen the space over the past few years really run into lots of issues around hacks, scams, and rug pulls. And so, I mean, in total, there's like 6 billion plus lost in funds. 2023 alone, there was about 2 billion lost. This year, I think in the first month of the year, it was over 100 million lost. And so really at Haven1, we believe that in order for this industry to scale and allow people to manage their assets on chain as is intended, essentially, it can't be off the backs of people losing money. We're kind of in this state where it's 2 steps forward, 1 step back, sometimes 1 step forward, 2 steps back. And so really we built this EVM compatible layer one blockchain with network level security guardrails that take away a lot of the questions that users need to have when they're interacting with things on chain. And so we can get into the details of that, but that's just kind of a quick teaser of what we're building.
No, awesome. Appreciate that. I also want to, before we get into further details, I wanted to touch upon Yield App. You're currently being incubated via Yield App. Could you tell us a little bit more about Yield App, please?
Yeah, so it's an interesting story, actually. So I met the team over at Yield App a few years ago, actually, while I was running Coinbag. And we were looking for different areas. And they had a DeFi fund that they were running, which was managing at that time about 250 million in capital that was being deployed into DeFi strategies. At the same time, Coinbag had a lot of institutional clients that were deploying capital into DeFi, doing things like native staking. And as the markets kind of took off, we actually started seeing people pull money back from interest earning mechanisms on chain. And it was kind of the same thing that rang true from their DeFi fund management team from a risk management standpoint, all the way up to our like public clients that were using Coinbag, which is that crypto just became too risky ultimately. And so we ended up pitching this idea to build a layer one ecosystem that would allow not only big capital, but the smaller capital to come in and be able to transact with peace of mind. And so basically, Yield App said, if you guys come and build this, we would love to incubate it. We'd love to use it. We'd love to be an initial liquidity provider onto Haven1. And so the marriage is born, and that's where kind of the relationship sits.
Amazing. Great to see. Yeah, definitely a good collaboration there. You mentioned some of the issues with mass adoption for Web3, but what do you feel are the biggest gaps to mass adoption?
So I think it's two things, and it's actually rang true from the very beginning, which is kind of funny because like crypto is all about like management of your own funds. But that's led to really two big problems, which is security and securing your own funds, and then liquidity. Those are probably the two biggest issues that have plagued this industry, which, like I said, is kind of funny because the original thesis of crypto is to be able to be your own bank, manage your own funds. But then we see that, unfortunately, because the power of smart contracts, people are able to basically exploit users in ways that we've never seen before. And we see that the exploits are getting more and more complex. There was a report that recently came out that said the number of hacks in 2023 went up. The total lost capital was actually down year over year. But what it told the story of was that, yes, so that was a bear market. So of course you're going to see less money lost in it, but you're seeing more exploits happening, and the exploits that are happening are becoming more and more complex. And so there isn't enough user protection things in place on this side. And I think when you're talking about bringing over users from Web 2 into Web 3, most users that are in the Web 2 space are interacting with their banks or interacting with different wealth management applications. They're interacting with them in a way that they trust those institutions to be able to keep their own funds there. And, so when they go into crypto and they start managing their crypto assets on chain, they expect the same type of I guess, accountability, and that accountability just doesn't exist when things go wrong. So don't get me wrong. Like I love crypto. I've been in it a long time, and I definitely see a place for complete permissionless ecosystems, especially as people that have become more aware of what crypto is and the powers of it. But there's this massive gap between what tools are available to users that are new to crypto, which is basically centralized exchanging completely black box products, and then the wild west, I'll call it, of what is the permissionless ecosystems, the Ethereums, the Avalanches, et cetera. So, I think for us, we want to fit in that sweet spot, which is right in the middle of that. And ironically enough, it actually ends up blending really nicely to institutions over a long period of time as well, because they need those protections.
Yeah, no, definitely see these issues, these barriers to entry. How is the plan with Haven1? What are you doing to solve these problems?
Yeah, so there's a couple of things. So I'll talk about security, and then I'll talk about liquidity. So on the security side, we're going to be the first ever network that has network level guardrails around mandated smart contract audits. So every single protocol that comes through Haven1 needs to go through 2 smart contract audits. And we have an audit committee that we put together. And then the next line of defense on that is we actually have an AI optimized smart contract review tool, which helps operationalize the smart contract audits, because audits are very, very expensive today and they take a long time. And so we have tools to help supplement some of these things while still having that final 90% done by real auditors that are looking at it and verifying everything. The second is that we are the first protocol to require governance to actually deploy the smart contract. So you can think of this kind of like the Apple App Store review barrier to entry. And the reason why is most smart contract hacks that occur are from malicious smart contracts that are deployed. And so this creates that extra friction to getting into the Haven1 network. So those are 2 core things. The third is that we will have on-chain recourse and clawback mechanisms. And so this is important for everyone, once again, from the small investors up to the large institutions, really on large institutions, especially as we start to see real world asset tokenization take hold. But everybody's been in this space where you go to send money in crypto and you have that moment of is this gonna, what's gonna happen if I send this money? And imagine it being hundreds of millions of dollars and not being your money, but rather somebody else's money managing, as asset managers typically do. This whole permanency thing is something that needs to be solved. And so we'll have that at Haven1 as well. And the last piece is that we will require every single user to go through identity verification off chain. And then what happens is we're working with ZK proof technology as well as our own proprietary soulbound NFTs, where the collectors of the KYC data actually mint anonymized data about you on chain. And so this data can then be used by builders, both regulated and unregulated businesses, to basically leverage the data. They can do things like geofencing. We see a lot of protocols today want to exclude certain jurisdictions and certain residents. And so with Haven1, you can do that. And then it's also, once again, that last line of defense, which is it's not just users going through KYC with us, but it's also builders going through KYB. So when you have your name associated to the project, if there is an exploit or a hack, you're going to be held accountable for that, which is ultimately there to protect the end users. So that's on the security side. And then on the liquidity side, I think we're going to see a lot of this coming in the near future, but Haven1 will actually build our own. We've already built our own 5 core protocols, which are usually what you see as the first protocols being deployed onto any network, which is a DEX, a lending market, perps market or derivatives protocol, an NFT marketplace, and account name service. So you can make transfers much easier on your accounts. So Haven1 has built those protocols. Now on the DEX, we're actually working with some off-chain providers as well as cross-chain liquidity providers to be able to source the best liquidities at the best settlement times for users. So basically from day one at Network Genesis, there will be liquidity on Haven1, both from our partners, in conjunction with YieldApp, but also from these off-chain liquidity providers and cross-chain liquidity providers.
Amazing. I think a lot of the audience listening in right now as well, they will want to learn a bit more about the native token and how that fits into the ecosystem as well. So if you could give a bit of an explanation about the native token and what you plan to go on with the token there as well.
Sure. So I guess maybe to preface this, we will be going to mainnet, or at least doing our token generation event, looking at end of Q2, early Q3. We are in public testnet right now, public incentivized testnet. So feel free to go and check it out. The more you interact with our testnet, the more rewards you can earn once we go into mainnet. But on that note, we will have a native token called H1 that powers the network. And so there's a couple of things here that are unique to the H1 token that most other protocols haven't done. So what happens is we actually created what's called the Haven1 itself is actually a gasless network. But we've supplemented this with giving builders the ability to offer application fees. So an example of this is on the DEX. So when you want to do a swap, you want to swap Bitcoin to Ethereum, there will be a fee associated to that, just like any other blockchain. The difference is that the developer can choose a dollarized amount that they want to charge users, be it 10 cents, be it $150, and that dollarized fee will be paid in H1. And what this does is one of the bigger problems from a builder standpoint is that they take on all the risk of the volatility of the underlying asset. And it makes predicting their business model very, very difficult. And it makes it very, very difficult to be profitable in bear markets when there's low volumes that occur. But with Haven1, because of this dollarized fee, you can actually start to bridge some of the Web 2 business models or traditional business models into a Web 3 out of the box. So you can have subscription as a service. You can have low volume, high cost types of applications. If you want to have like an exclusive NFT marketplace that you need to pay a subscription to get into, to have exclusive rights into something. And all that can be done automatically from the application fee contract. And it's completely flexible for developers. So they can actually use that fee contract to mimic or model exactly like percentage based on swaps if they want to do as a percentage of the actual transaction, or they can just keep it as that dollarized fee. But the best part about this is as we start to bring on more mature money into this space, rebalancing is a huge cost for a lot of businesses that are moving money on behalf of users. And there shouldn't be a cost between inter-wallet swaps and rebalancings. And so Haven1 does that out of the box. And we can actually do this because of our identity verification framework. So you know that you're not in this position where you have Sybil attacks and you have other types of things, DDoS attacks on the Haven1 network that make gasless networks very, very risky out of the box too.
Amazing. We have a question from Christian here. Are there platform fees or tiers in the platform?
So this is the application fee concept that I was mentioning. It will change based on the protocols that you're interacting with. So the 5 core protocols, the DEX, the lending market, the perps market, the account name service, and the NFT marketplace will have application fees based on interactions that you do. And that will be associated, like you'll be able to see those costs. So for example, like on a swap, you will see what the fee is at that time. So you can make a decision. Do you want to interact with a smart contract or not? As we grow our ecosystem, you will see that developers can choose whatever application fee that they want. And so, yes, they could do things like tiers. There's ways in which we could actually create loyalty type of programs, or other protocols could build loyalty type programs on top of Haven1. But that's up to the builders ultimately. We're just giving them the frameworks essentially.
No, brilliant. And with ecosystems often stale at mainnet launch, what will Haven1 look like for users when they launch the mainnet, and how are you going to drum up the hype?
Yeah, so we have a pretty bustling ecosystem already in terms of signed partnerships, and we're going to be slowly, actually this week, we're going to start announcing all of our partnerships. So feel free to join our socials if you want to see all the cool things that are coming into the ecosystem from day one, but also probably over a 3 to 6 month period, because it does take time for builders to deploy. But to solve some of the problems that oftentimes occur, because when new layer ones get launched, usually they're quite stale and there isn't a lot of activity. This is why we have those 5 core protocols. And actually there is a 6th protocol that we're working with in conjunction with a partner around a high yield savings vault. around a stablecoin product. So basically,
Nice.
very easy ways to earn interest on your stablecoins based on structured products that sit in the back end. So it's a pretty robust financial tool. But yeah, from day one, you'll have a DEX, you'll have a lending market, you'll have NFT marketplace, account name service, and then you'll have the perps market as well. The perps takes time though, because you need a lot of liquidity on the chain in order for a perps market to take off. So those are things that will be there. But yeah, and then as I mentioned, there will be several different partnerships announced.
Brilliant, amazing stuff. And guys, Jeff mentioned there, if you're looking for more announcements from Haven1, make sure to go follow them on the official Twitter on the screen there, guys, Haven1 Official. They also have a link tree with all their official links as well. So guys, make sure to go give them a follow. Super interested. There's going to be lots of announcements coming soon. Also, Jeff, what will the next wave of DeFi look like in this bull run, do you think? Where do you see Haven fitting into that in the latter stages of 2024?
Yeah, so this is a big question, and I think you can take a lot of angles on it.
Yeah.
What I'll look at is history typically does repeat itself, oftentimes, hopefully in better ways than the past. And so one of the things that we saw drive the last bull market up was the Celsiuses, the Voyagers, the Nexos, the Yield Apps, companies that were basically offering these simple earn products for users, albeit centralized products. And so I think what was it drove billions of dollars in TVL into crypto, not on chain oftentimes, but what it showed was that there's a massive appetite for people to not only buy crypto and hold crypto, but to earn interest on it and have very simple methods for earning interest. The problem is that it was all done in a black box. And so I hope, and a lot of the partnerships and people that we're talking to, we're seeing TVL numbers jump up, but I hope we see DeFi 2.0 look more like a lot of on-chain asset managers that provide very transparent earn strategies for users. So staking is obviously one of the best ways to earn interest on your crypto, but there's so many ways in which you can really amplify those with on-chain structured products. And so I do hope that we see a lot of movements in there, which users have more transparency into how the actual earn mechanisms are occurring, what percentage is going off chain, what percentage is staying on chain. Because as a user, when you want to be your own bank, you need to have all this. You can't just have the decision to move your money into place. You need to know the strategies that are going on in the background, and that's something that blockchains provide, where you don't necessarily and can be validated. So I definitely see that being one angle. The next angle I would say on this is we're obviously seeing a massive appetite for real world asset tokenization. I personally don't think that the use case that always comes up is real estate. And I personally don't think that we're going to see real estate hit scale this time around. I think that when you talk to the industry and you talk to clients out there, the only way that you can actually scale it is you need these massive custodians of real estate to come in, because the operational headaches that come in are a nightmare. So what I see being the first wave of real world asset tokenization, which once again, history repeats itself. I think it will be equity. So stocks, bonds, ETFs, and maybe commodities.
I agree.
Actually backed by legit custodians, not synthetic versions that are, people are kind of just putting up in the air. But I do think that it brings up a very big concern, which is that as we see people moving into real world assets, and you'll see this obfuscation of what is on-chain versus off-chain, there's this massive layer of trust in the middle that people don't necessarily understand that they're interacting with when they see that they can buy a Tesla stock here and all they need to do is click connect wallet and purchase. They're actually trusting that smart contract is actually buying that Tesla stock, underwriting it, and holding it for you. And so I do see a huge risk coming up here, especially with real estate, because this is probably where we're going to see the biggest rugs and everything. Is I see a massive hack, scam, and rug opportunity there. Opportunity is a really bad way to put it, but
I totally understand. A lot of it at the moment is a lot of it in the Web3 world, especially with real world assets, it's a trust me, bro process. Is the money in the smart contract actually going to the assets it says it's acquiring? It's difficult, but as time goes on, I think this will improve, like you say, with property as well, but it will take time.
Yeah, it takes time. And I'm guessing it's that the property stuff will be in next year. I think there's some really interesting use cases around like highly risky custodied assets, like diamonds, for example. We saw this project, we were talking to this project the other day that was doing tokenized diamonds, but over 5 carats. And so that's a really interesting thing, because at that point it becomes an investment when it's over 5 carats, and the risk to hold that and carry that with you or custody that yourself is super high. So those are things that I think we could see some interesting movement on as well. But it's niche at this point.
Definitely. We've got another question from Christian here. Will you be diversifying into real world assets for a hedge in the bear markets?
So Haven1 itself, from a treasury standpoint, potentially talking about even tokenized T-bills and things like that. We've seen the kind of the hype and then die off of that because the interest rates have started to come down. Short answer is yes. But we're not going to do something in real estate or anything like that. It doesn't make sense for a layer 1 blockchain. I will see a lot of people, I bet you a lot of people will start to do that. And it actually makes a very easy way for people to, one of the issues in crypto is that you make all these profits in a bull market, and then people want to figure out how to take profits and where to put them into to diversify them. Yeah. But when you don't have, you have to take them off chain, you have to go through centralized exchanges, then you have these massive tax bills that you're having to foot. It creates a lot of even internal operational issues. And so when you start to see tokenization of these types of assets, I do think that we'll see diversification, which once again poses a big risk for people. I think it's a good question. I think from a layer 1 standpoint, we probably won't diversify too much into real world assets, but we obviously have our own mechanisms in terms of moving some capital into fiat, holding some T-bills and other interest rate mechanisms on the treasury, so it doesn't just diminish over time.
Brilliant answer. And we have another question from Zerg Hunter here. So what bridges will there be to the Haven1 network?
Yeah, so our bridge right now is powered by Fireblocks. So you actually can go to bridge.haven1.org. We're actually finishing up development of it now for the test net, so you can go in and play around. You can bridge assets from other chains. And the way that it will work is you go to the bridge on our UI, and then you choose which KYC provider you want to go with. You do your KYC, and then you can transfer assets in once you've successfully minted your identity, your anonymized identity onto the Haven1 network. With Fireblocks, we will have a 1-to-1 proof of reserves that's there 24/7, so you always know that your assets are protected on the bridge. So really trying to do things in the way that we would want to work with the product and issues that we've seen with other bridges. So that's kind of the short answer on that. And then obviously exchanges and things like that will be ways in which you can transfer assets in, as well as even working with someone like YieldApp.
Awesome. And from Jejic here, he said, after experience with the testnet, all transactions like swap, pool, claim was executed fast. How would you focus, and what made you develop the speed of the network?
Yeah, so we actually went a little bit, I guess, away from what a lot of other people are doing. So we wanted to build an EVM compatible blockchain first and foremost, and so it is. But we actually took a fork of GoQuorum, which was originally built by JP Morgan, sold to Consensus, then open sourced. And so that we took that fork, we obviously now have enhanced it significantly. Yeah. But one of the reasons why we chose that is that it's scalable. It's scalable out of the box. So you have 2,500 transactions per second at the beginning, which is competing with the best out there. You can basically choose the real metric you want to look at is time to block finality. And right now we have it as a conservative 5 seconds, but you can actually reduce that down if we wanted to, and we will over time without having to do a hard fork of the network. So that's really important. And then also, with Quorum, you have the ability to do both public and private node infrastructure while still tapping into the same settlement layer underneath. So this is really important when you're talking about small governments, banks that want to come on and they want to tap into the liquidity, be able to use it, but they don't want to give everybody access to all their different strategies. Like if a hedge fund, if everybody can follow a hedge fund's wallet and movements, then they're not really a hedge fund anymore. And so these are things that we're trying to think 2, 3, 4 steps down the line and what is needed to really scale this out.
Amazing. And we have a follow-up question from Thomas here, just saying, can we bridge already?
So not yet. Pretty soon. So we're in as I mentioned, we're finishing development. I mean, hopefully this week on the testnet bridge, which will allow you to start tinkering around with it. And we'll definitely let everybody know once it's there. And that's another good way to earn some rewards to give us feedback on it.
Amazing. And we have a nice comment from Christian here. Sounds amazing. Haven1 just added to the list.
Great.
Brilliant. What are some of the other layer 1 projects that you look to compete with in the future?
Yeah, so I think that there's probably 2 core, or let's say 3 core ones that come to mind. So first is going to be the base of the world. So I guess how we differentiate from them is that they're focused more on the U.S. markets, and we're kind of focused on everyone else. Eventually, we will tap into the U.S. markets, but there's enough to play around there, enough space.
Sure.
So that's the first side. Kinto is another one. So they're a layer 2 blockchain. They're a roll up to Ethereum built on Arbitrum. They're I guess a competitor to ours. I think when you build an L2, you're sort of limited at its peak based on what Ethereum is doing. And so that's ultimately why we split out and built our own thing. Plus, also you have extra risk that you can't necessarily control when it comes to settlements and things like that. Like, yes, Ethereum is secure, but the moment something happens, you can't actually control it yourself. And so we want to have full control over this secure, safe haven. So that's another one. And then I think, from a permissionless standpoint, you have the Spruce network on Avalanche that I think is going to be starting to garner a lot of adoption. But, I think that we've kind of carved out our own little niche right now. And I think you'll probably start to see a lot more people get into this space as people understand that KYC is already done, regardless of whether you think it is or isn't, right? So the question is now, do you want to use it to protect yourself, or do you want to use it to, to try and play the game of, I want to be completely anonymized? Like that's kind of where it's at. So we're just trying to do it the right way and keep it anonymized and make sure that people only have the information that they need.
Amazing. And you guys have definitely built the foundations of a solid project. It's definitely got a long-term vision here. Christian asks, what is the ideal look of Haven1 in 2 years? I'll extend that to perhaps 3 years here. So if you could give us a bit more detail where you see Haven1 in 2 to 3 years.
Yeah, so I mean, I think the bigger mission for Haven1 is to be that bridge between Web 2 to Web 3 users and businesses. And so really, I think what I hope to see blockchain look like in the future is that users are interacting with protocols and they understand exactly how their funds are being used, because not everybody wants to be their own bank in the sense of like actually going in and choosing to lend. They just want to say, okay, I want to earn interest on this. I want to have somebody run this strategy for me, but you need to be able to trust that. So that's the first thing. The second is I honestly hope that it's a weird thing to think about, but the more hacks and scams that occur, the more legitimate space can become. And so in 2 to 3 years, I see Haven1 looking like a platform that users go to, can transact with complete peace of mind. They can purchase real estate. They can purchase their stocks, bonds, and ETFs, and they can have their entire real estate portfolio managed. Sorry, not the real estate portfolio, their stock portfolio, stock, bond, ETF portfolio managed on Haven1, as well as holding their cryptos. And we'll see a lot of on-chain crypto asset managers. Like, that's really where I hope we see Haven1 in 2 to 3 years, is this very robust, bustling ecosystem of a diverse set of applications. Like with our proof of identity framework that we have, there's really cool use cases around like unsecured or under collateralized lending. Yeah, that's a big issue in the space today, is that every sort of loan that you want to take out needs to be over collateralized, oftentimes 2 to 1, which means that the only use case that you can have is actually for trading, because you have to take it, you margin, and then you take your trades and you move it back in. And that's not scalable for this industry. The reason, like, the whole industry is like the entire world is based on fractionalized baking and fractionalized reserves. And if you can't bring that on chain, then we're never going to tap into the $100 trillion capabilities that are there. So those are the types of products that we want to see built on Haven1 that are really useful for people to come in and be able to use their capital and assets as they want.
Amazing, Jeff. I really appreciate the long-term vision here, and excited to see what Haven1's not only got coming out this year, but also the next. Guys, if you have any final questions, please shoot them in the comments. Make sure to like, comment, and subscribe. Jeff, if you have any final words, any way to wrap this up, please let us know. We'll see if we have any more questions from the chat as well. But really appreciate your time today, and definitely got me pumped, and a lot of the chat pumped on Haven1. So thank you.
Yeah, thanks for having me. And we're a growing community now, so feel free to join our channels, join our test net. We're always looking for feedback. We come from a product and engineering background, the whole team does. And so we're always looking to iterate based on what you guys are looking for. So feel free to be loud, let us know. And I think I'll put one final cap on this, which is, as the bull market is coming back in, and this isn't financial advice, but everybody go out and please be very careful with your funds. Really make sure that you're understanding where you're deploying your capitals to. Yeah, do your own research. These are things that I think, it pains me so much to see new people come into the space and lose money. Old people that have been in the space losing money. It's really as great as crypto is and how amazing the opportunities are to change your life financially. You can very easily lose it very quickly too. So just do your own research, double check, triple check everything that you're doing, and have fun.
Awesome, Jeff. Some very wise words there. Guys, everyone in the chat right now, make sure to head over to Haven1 on Twitter. We've got the official links here through their link tree as well. Also in the description, you will find the link as well, guys. Thank you so much for joining today. Look forward to inviting you back on, Jeff, as well in the future. Very excited to hear more of what Haven1 has going. So, guys, give a like, comment, subscribe. Thanks for joining. Cheers.